Hey, welcome to the 40 Finance channel, everybody. My name's Jeff Beers. Today we're going to be looking at a handful of stocks that are actually projected to grow revenue at a higher pace next year. So this is very difficult to find in the stock market right now. A company, let's just say, grows revenue 50% in this year. More than likely, that type of monster growth tails out a little bit into next year, right? So you could grow 50% this year and then grow plus 30% next year, which is absolutely incredible. That's what a lot of growth stocks are doing. But in this case, I'm looking for companies that grew, let's say, 25% this year, and next year they're going to grow 35% on the top line. So increasing growth on the revenue line. Now keep in mind for this video, we're talking about expanding growth on the top line. We're not going to get into a lot of the other fundamental metrics because we got several names to cover here. So every one of these stocks, you're going to have to go back to the drawing board a bit, do your own analysis, and figure out if it's a good match for you. I think the most interesting thing here is the number of names that do not qualify for this sort of stock screener exercise. So we'll kick off with a couple that you probably have in your brain that I would have guessed are going to grow more next year, but they're actually not projected to. Okay, I'm going to kick things off by showing you exactly the criteria I was looking for this screener exercise. We'll kick off with Palantir. Palantir does not qualify. Now, Palantir is a stock I own and I like it and it's not going anywhere. But the reason I'm kicking off with it is just because it exemplifies how hard it is to find expanding revenue into the out years. The quickest way to look through a bunch of names for this exercise is Yahoo Finance, in my opinion. And I am on the PC desktop version, and I'm looking at the analysis tab here for Palantir. You get past the earnings estimates. We're not talking about EPS today. We're talking about revenue estimates, and you have current year and next year. So I'm focused on next year, right? The out years. Who can grow more in the out year, at least from a projection standpoint, than the current year? Lots of companies are growing plus 50% or so this year. Who can do it again or beat it next year? That's what we're looking for. So you see with Palantir, 1.09 billion in 2020, 1.5 in 21, 38% increase. Can they beat that? Does anyone project that they will beat that next year? The answer right now is no. They're coming in at a plus 29% projection, which is still awesome, but I'm just using it as an example to let you know how we're looking at this. There's a lot of popular ones that I figured would not come through. I see Snowflake here. Click over that. We got to get to the analysis tab. Snowflake having a great year, plus 92%, but next year, plus 64%. Outstanding growth, but it is not more than the year before. How about CrowdStrike? Very popular stock. We're sort of in these software stocks right now. Revenue estimate this year, plus 56. Next year, plus 36. So anything over a 30% revenue growth rate is absolutely outstanding. I'm just pointing out that it's less than they're projecting for this year. Okay, now let me show you the stocks I found, and it wasn't easy, I'm telling you. The stocks I found that are going to grow their revenue in the out years, and the first one on here is the Disney company. And this makes a little bit of sense because they're probably not at full capacity yet, and of course the streaming option has been popular. But this year's revenue growth is single digits, 3.6%. Next year, the projection is 25.6%. So when you think of it from maybe a price to sales angle, Disney's price to sales is certainly going down. And if you just eyeball the EPS up here from a value standpoint, you're basically doubling that EPS as far as projections go from the year before. So Disney might be one to add to your watch list. All right, next up is a stock I own, and that is PayPal. Let's take a look at PayPal's revenue estimates. Get it balanced here. This year, projection plus 20%, going from 21 billion to 25 or so billion. Next year, coming on just a hair over at 22, call it 23%, going from 25 billion if they hit that number this year, all the way up to 31 billion. And similar story to Disney, you also have an increasing EPS, which is an important part of the value. They go from 473 to a target of 591 next year. Now, interestingly enough, since I see it right here, I sort of thought Square would be in this category, but take a look at Square real quick. Square did not make the list. Square projected at 100% growth this year, which is phenomenal, triple digits. Look at next year though, 12%. That surprised me, and I own Square stock as well. That really, really surprised me, and I think I'm gonna have to take a deeper look at Square now. I certainly don't expect triple digit growth every year, but I would have figured this number to be more than PayPal's, quite frankly, 25, 30, 35%. Certainly for a company that's been growing at the pace that Square has. All right, let's take a look at another company that is in my portfolio. That is Taiwan Semiconductor. Taiwan Semiconductor. So on this one, my screen set up here. 23, call it 24% growth expected this year, going from 45 billion to an average of 56 billion. Next year, jumping to 77 billion. That is a 38% growth projected for next year. Folks, on a 77 or 56 billion dollar company in terms of revenue, that's a pretty substantial growth line. So I definitely recommend TSM as a stock to put on your radar. All right, next stock, I actually see it right here. Micron. So Micron got bashed recently by some, or just one or two analysts. But what's interesting about Micron, even after that recent report, I mean, if you go to their revenue estimates, plus 29% this year, next year, plus 33.2%. And then the EPS growth is absolutely outrageous. 283 last year, $6 this year. Next year, the average estimate inches towards just a little past $11. So Micron, in my opinion, is a pretty good value. The only catch with Micron compared to some of the other names that we have on the board today is just the limited moat that they have, because the type of memory that they sell can basically be accomplished by a lot of different firms. So they don't have that technological moat, and that's the only reason I haven't bought it yet. But everything on the value side suggests Micron has some good things coming for it. And since we're over here with the popular chip stocks over here, just to answer the obvious question, what about NVIDIA? Plus 54% this year on the top line. Next year, I was a little surprised about this. Next year, 12%, put that in the Square category of companies that I was surprised are dropping below even 15% on revenue growth. All right, next one, ticker symbol AI. C3AI helps companies with the software application to implement AI technologies into their workforce. And what we have with them, they're barely ticking above the growth that we're looking for, but it is indeed here. Revenue estimates this year, 33.9%. Average estimate of 245 million. Next year, average estimate 329 million. And that would be a growth of 34%. Important to note though, their EPS is sort of going backwards this year. It doesn't look like they're profitable. So if you're interested in C3AI, just make sure you read through all their investor presentations and know what you're getting into. I have not studied this one in detail. All right, next up on the board, we have a couple of hotels that are very similar. Marriott is one. Obviously, tough times in the hotel industry, and it looks like business travel is still going to be behind the pace heading into next year. But sales growth this year coming off of pandemic, plus 26%. Looking ahead to next year, they grow another 40%. So maybe if you were looking at Marriott from a value standpoint, got 18 cents this year on the EPS. Finally get back to something more positive at 284, and then potentially 519 next fiscal year. And the counterpart that I looked at that's very close to the same, Hilton. So you got sales growth of 30% this year, looking ahead to next year at 42%. And their EPS also goes from barely distinguishable up to $2.20, and then $4.21 potentially next year. All right, outside of hotels, you also have cruise stocks are almost all in the same situation of revenue growth expanding. So what is this one? This is Royal Caribbean. You got minus 12% this year, plus 400 next year. Just keep in mind that they are carrying some decent debt, and it doesn't look like positive EPS comes until 2022. Let's see what Carnival shows. This is not as much of a growth story as it is a rebound story, but same thing here, minus 50% year over year, which that sounds surprising to me, honestly. How are they minus 50% on the top line in 2021? I'm not too sure. But you do have next year 510%. So maybe if you got in these cruise stocks and you thought the turnaround was going to be faster, there might still be an opportunity to just hang on to it. Particularly, I know some of you have left comments before that you get some sort of priority seating with Carnival stock. So maybe that's good. Just keep riding it out, but the recovery does not look like it will land in the fiscal year of 2021. All right, next stock, a little bit smaller cap here. One that I was surprised to see, FSLY. FSLY's taken a beating. Let's look at their year-to-date chart. February 9th, $117. Now you're down to 43. But from a top line perspective, they are going to inch out more growth, and by inch out, I mean 18.7% this year, 19.3% next year, and EPS down this year, more negative this year, maybe bounces a little bit next year. I know the last time I looked at FSLY, when it was more popular, I thought it was wildly overvalued, and I'd have to dig in further to say if that's still true at $44. I will say that plus 19% isn't exactly gangbusters in the technology space, but considering how much the price has come down, it could still be worth a look. All right, and the last one on my sheet is Poshmark, which is basically like a resale marketplace for high-end fashion and accessories. Their year-to-date chart is sort of melted down a little bit here. Can tell you that I'm not super familiar with this stock outside of the name and the familiarity from their television commercials, but they are eking out a gain on top line revenue projections. It looks like plus 26% this year, 27% next year. And then on the EPS side, I'm not sure what happened last year at $1.25, but you're dropping to minus 54 cents this year. Looks like they pick the pace back up next year and get a little bit closer to profitability. So with Poshmark and everything else, social, marketplaces, whatever, there's going to be some bears who say the world moves on from social shopping and e-commerce. I happen to think that it's here to stay, but this was one of the few e-commerce operations that's actually growing basically at the same pace for next year. So for example, Etsy is a stock that I hold and it has done very well. So if we think about Etsy compared to Poshmark, Etsy really good this year at plus 32% is the current projection, but even next year it does slip off of that growth pace slightly down to 20%. So Poshmark in some ways, at least from a top line standpoint, is eking out Etsy, granted on a much smaller scale of revenue. All right, guys, so I really did click through hundreds of stocks to come up with that short list. So it is a pretty exclusive club. Doesn't mean that they're all going to go to the moon or anything like that, but I found it very intriguing. Just in case you're curious on like some of the high flyers out there, Tesla, Upstart Holdings, we talked about NVIDIA, Shopify, DocuSign. All those companies did not qualify for this list. So again, it's not everything, right? But it just shows you that a lot of stocks right now, heading into the back end of the fiscal year, they are priced with that current pace that they're on. More than likely, for the majority of stocks, that pace can still be positive and good, but that pace will slow down next year. All right, investors, hope you enjoyed this look at stocks that are growing more next year. If you did enjoy it, please give a like, share the video with your friends. Really appreciate it. We'll see you on the next one.